Welcome back, order flow traders. In today's video, we're going to be covering a footprint chart setup that is going to make you money. All right, so in here, this is actually a live stream footage that I pulled from one of my streams from a few weeks ago. I'm going to put the video so you can see me walk through. Any annotations you see right now are me walking through the trade, explaining it down to the very detail as to what I'm looking at, why I'm thinking this is a bullish setup as we're trading near the lows of the day in the morning part of the session. I'm highlighting items. You're going to see the screen change. You're going to see price move, but nonetheless, this is going to be one of the setups that is really high probability, high quality setups that always results in a reversal. So I'm going to cover now what this setup is, what it looks like. But before we dive into all that, I'm going to make sure you guys understand what a footprint chart is, what it shows you, how to read it properly, and then we'll dissect what it is this strategy entails, how I'm able to dissect the information in this footprints to ascertain and understand that a reversal is afoot. Because there is another example I'm going to pull from where the exact same setup appeared but was on the opposite side. So the reversal was on the top end going down into the low end. So with that, nonetheless, let's get started. We're going to let the clip roll through just for a few seconds. You can see how this low end rotation ended up exactly hitting that previous imbalance you're going to see at the top end of this range, right about where that sell side came in on this here. This is exactly the first profit target area I have annotated, and that is exactly where we hit to the very T when price decides that it wants to go higher. And there it is, the profit take. This position ends up rolling up. I'm going to link the video in the description so you guys can see it in real time, exactly how I managed the trade thereafter. Just look at that squeeze, beautiful. So the first question is, what is it? What is a footprint chart is the question. Well, essentially, these two charts are the same. They're the same thing. They're both 5-minute candle prints, right? This is the ES, same ticker, ES futures on both ends, and they're both within a 5-minute time frame. This one here indicates 5 minutes. That means that each bar is equivalent to 5 minutes of information or data collected. So these two bars are one and the same. The difference is very critical. The difference is I can see every single transaction that has been filled on the buy and sell side inside of this print that created this imbalance or what ignited the move. I can see not only all the orders filled, but who the aggressor was. And you can see here on this column, you can see that there's a back-to-back amount of times, about 4 or 5 times, where per tick there was on average 5 different times at the high end of that print buyers outweighed the sellers at a percentage of 300% more than the sell side came in. And that's why these numbers highlighted are showing up as yellow as opposed to white like any other number or transaction that occurred. This is critical data because then it tells you, well, where are the orders getting filled from that print? And then when they were filled, where was the aggressive behavior? Where did it come in? At what price? Was it at the low end of the candlestick? Did all the aggressive imbalances form here? Or did they form at the high of that candle? And as a result, what did the previous candle print do as well? What did the buyers do 5 minutes thereafter? All that information is very contextual and key to understanding what is potentially possible and what is actually more than probable to occur. When you're looking at a candlestick chart, you won't be able to see that. You're not going to see where the transactions are coming in. You can't see who the outbalanced buyer is, if there is even any. Sometimes these spikes that occur are happening on just a normal stop run. And so when you're able to ascertain the difference between the two candles that print, you can understand that there's a potential continuation as opposed to a stop run in an unfavorable direction. So if you guys want to know more or less the settings that I have enabled in my software or a review of the software that I'm using that I'm covering here, it's Jigsaw Day Trader. I'll put the link in the description below. In there, I show my setup, how I set up my personal station for footprint charts, Defa market for the NASDAQ and the NQ. But nonetheless, let's continue on. That's to what does it show you exactly is the question. So the very basis of what the footprint will show you is essentially where all the volume is transacting within a given tick value. As you can see on the y-axis, you can see that this is the price that the asset is currently trading at, and within that you're going to see all the transactions that are getting filled as price moves up or as price moves down. The the information here is critical because as these prints are developing, you're going to contextually understand is as price slows down and transacts for a period of time, who is outweighing, whether that's at a key support or demand level, or at a key supply or resistance level. As we approach these key areas, it's important to understand is if volume is coming in and it's getting thicker and thicker, and the buy side, in other words, you can divide these two in half, the buy side or the offer, who is transacting the most? What is happening? What is the relationship between buyers and sellers at this given price? And how are they behaving and reacting as a result of price transacting there? Are there imbalances? And imbalances are in this case going to be highlighted yellow. Now the settings that I have is anytime there's an imbalance, it's got to be 3-to-1 is the ratio. So if you look at this number here, the way the prices transact are across. So you have an imbalance here that formed, and you have an imbalance here, 3-to-1, 74 on the offer, and you have 359 at the bid. That creates a highlighted number on the offers, on the bid side, on the offer side, showing the aggression and the intent of those participants at that given price. Unfortunately, you will not see within a candlestick chart. So this is one of the main critical things that it shows you. The second is it will show you if price is getting swept quickly. What does that mean and what does that look like? So if price is getting swept, you can see that the profiles will be very thin near the tail end of that print. So in this case, this is a 5-minute print. This is going to connect with this print here, that red candle that formed on this imbalance or this candlestick right before hitting resistance. When price came down, and you see it on a candlestick chart, if you were unable to see the true nature of how that price or that candle wicked out and transacted, you could be potentially scared out of your position. But if you understand that you can see on the footprint, you peel the veil and you're able to see that price actually came down but immediately was swept. You can see that in this particular few ticks as it drifted lower, these were actually stops getting triggered on the way down, and those stops were quickly absorbed by the buy side. This information can keep you in a trade longer, can tell you true intention of the participants as we're hitting those critical, in this case, resistance levels as price is trying to run in favor of the bull side. Those are two things that are going to primarily you're going to see as to what is in the footprint chart and what it shows you. Now there's much more information. This is just a surface level introduction just to kind of get into the strategy that I'm trying to explain for the footprint setup that I started in the introduction of the video. In this part of the video, the second most important aspect of it is it's going to be where the footprint chart will give you the ability to identify positioning within the range we're trading. So if we're barcoding, in other words, trading within a sideways range, there's always going to be, for the most part, an area within that range where the most of the volume is being transacted. That's either the top end, the low end, or near the middle or at balance of the range itself. Having that information contextually from a footprint chart will give you the ultimate possibility of the outcome once that range resolves itself. And that is exactly what the strategy entails, is identifying a range and seeing where the majority of transactions are. In this case, in the beginning, there was a lot of the transactions, a lot of the volume was forming on the low end of that range, which then in turn resulted in sellers getting trapped or stuck, right? All the sellers are trying to break down price at the low of that range, getting absorbed, when at some point they exhausted every single seller and reversed price back up. And I'm going to cover that again. I'm going to go briefly over the footprint, how that looks like step by step, identifying all this participation, all the absorption taking place, and how the market resolved itself and broke out of that range in the opposite direction or reversal. Before I dive into that next strategy to explain it to you guys, show you guys in a live example, I just want to cover one thing, and that's if you guys want to support the channel and you guys are true order flow traders, I have dropped some merch I'm wearing right now. There is some logos. I'm going to drop that logo here in the screen so you guys can reference it. I do have the store linked in the description. It's tradewrick.com. I have more than a few tees set up, more to come. There also is educational content on there, so feel free to check in there. Subscribe to the email list if you want to receive notifications when a new post for education is posted or a new product is dropped in the shop. Thanks. Now that we have some sort of background on what it is a footprint chart is, what it shows, I can kind of build a little bit on it and explain what this setup is and why it looks like this and why price to some degree ended up reversing, right? So as you can see, these are, again, recapping 5-minute prints each one. You can see that the market's only been open for about half an hour, given that each print, we have about 1, 2, 3, 4, 5, 6 prints. So it's about half an hour. And each one, there's a very, very critical components to this. We're going to break it down from top to bottom so we can really understand what was happening in the morning. You can see that at the opening balance, a lot of transactions came in, very typical for the market open, and we immediately went lower, right? And every single time we went lower, we bounced up on the second print, rejected the opening price, went lower again, volume got filled out at the low end of this curve, and every single time price would go up. You can see that the sellers are willing to sweep price. Now, how do we understand that price is being swept down? Again, if you go back to one of the important things that I covered was the thin profile, the thinness of this profile. Every single time we transacted higher, price is getting rejected immediately. The thickest part of the profile is always at the tail end of this setup in specific. What this means is that sellers are truly showing intent and being aggressive every single time price is trying to go up. Sellers are aggressively hitting the bid at the market, pushing price lower. The problem lies is their inability to break price. Now, they are making new lows. Don't get me wrong. Every single print went lower, made a new low, made a new low. At some point, they were ineffective at making new lows and actually were unable to break price lower. I'm taking context as this is happening at the open. And the most critical aspect of this goes back to the range. We were in a range within the opening price and within the low end of this, excuse me, and low end of this range. What was happening is a lot of the transactions were getting filled at the low end. You can see that the sellers are really willing to transact because the orders that are getting filled, you're getting tons and tons of volume every single time we transact at the low end. The problem with that is, with the sell side, is that price doesn't move. It only moves 2 points, no more, in favor of the sell side. So as price continuously does this, I start to initiate a long position. You can see that I took long here at 60.50 was my long, somewhere around here within this price point. And if you want to refer to the stream, I'm going to link it down below in the description below. I explain why I'm entering and where. But at some point, what happens is these sellers, the aggressive ones, initially the ones starting here at the top end of this range, they are getting absorbed. They are being met with buying. As price goes lower, these nodes get thicker. And the reason they get thicker is that buyers are willing to step in and slow price down and absorb all the orders as the price goes lower, which means that these sellers at some point can be stuck. And those short sellers, if they start to dry up or an aggressive bid or aggressive market buyer comes in, can sweep price up and eliminate all these aggressive sell orders or market sells at the market at the top end of this range. And that's exactly what happens. As you'll see, we're going to roll the tape through here really quickly just to kind of show the aggressive behavior of the buy side and how the squeeze ends up occurring as soon as we get past this big sell imbalance and above the open. So stay tuned. Give me a sec. And what you're seeing there is me trading live, explaining the explosive behavior that is going to resolve itself out of all that congestion of orders taking place at the low end. That's the reason I drew those expansion lines. I'm saying that that is fuel for the market to move higher if price doesn't resolve itself any lower. In there, I highlight the imbalance on the sell side that came in right at the open. I'm explaining that once we get over that order block, we are potentially going to squeeze past all those sellers because those net sellers at some point can turn into buy orders if and when they get stopped out. As you're seeing this footprint right up, you can see that there is a lot of zeros printing on the left column, and on the right column, those are stops getting triggered on the way up, and as price goes higher and higher and you see more of those zeros on each column as the print is developing and the buy side, you can see that those are stops getting hit and that sellers are potentially in trouble at this point, and price is going to continue just to ride and scream past all those sellers that came in at the morning open. All right, and this is going to be the other setup that is also identical but flipped on its head. So this example here is actually from another trading session. You can see the title was there. I'll make sure to put the video of this one in the description. It's chapter there for you guys, for anyone who wants to go view it. But essentially you see me here drawing live. Those drawings are for me from the previous recording taking place, and what I'm highlighting here is the significance of this zone and how what was previously shown in the previous example was happening on the low end. Again, we got a range in price, and then we have tons of volume explaining taking place at the high end with no ability to break higher. You're going to see me draw out some things as the video rolls through. Those are just from things from my recording, but nonetheless what's happening here is instead of sellers on the low end of the curve, as you saw on the previous example, the opposite is happening here. Buyers are getting trapped at the high end. Now, the difference here is there's not as much volume being transacted. As a result, the move to the downside is minute compared to the other move that we experienced or shown in the previous example. You're going to see me here try to pull up the example live of the previous setup. I actually showed it to my viewers live on stream from a previous video. I'm probably going to pull this up within the next few minutes. The exact strategy that I took here and the one I took from another video, I pull up the live stream, I explain the concepts. But nonetheless, this is the exact same thing. You're having price getting swept at the lows, right? These thin profiles every single time the market dips down, but then you have the thicker node at the top end of the range, meaning sellers are willing to absorb price, and those buyers at the top end of that range there that I'm highlighting right now, they are getting now stuck or trapped. And when traders get trapped, then they're more prone to getting their stop losses triggered and sell to the downside. So I'm not initiating the trade yet, but you're going to see me take a trade here on this DOM right now in this very second. As we approach to this part of the area, I'm going to be interested in entering the trade there. You're going to see me take the trade, and I'll kind of end it there. You can refer to the live stream. But this strategy always works for about, on the ES, about I would say 4 to 6 points on the initial rotation. If there's a benefiting scenario where there's more stops that get triggered and hit, then it usually ends up being about 10 to 15 point trade, depending on how aggressive the sell side or buy side is, depending on where that imbalance occurred and where those trap shorts or buyers are found and what happens thereafter. But the initial rotation is always good for around that point. So if you guys want to watch me do this live, feel free to subscribe to the channel. I'm live Monday through Friday before market open, 6 a.m. Pacific. Nonetheless, here we are approaching the area. You're going to see me again. This is a pre-recorded screen from one of my live streams. I'm going to enter the short right there at where that imbalance starts. Again, where all this sell side is getting absorbed, that's exactly where I'm taking the short, and I'm going to use the previous high as my stop loss. In the event that they do reward those buyers, I'm going to be using the stuck buyers as my stop and using their stuck orders or their trap as my benefit to enter the short to bet against them that they're going to be rotated to the downside. So you can see there, I shorted the 76.50 at the start of this block where all the sellers are getting stuck, and this trade ends up working all the way through the 60s, I think 10 points down, but nonetheless, watch it live, you'll be able to see. If you guys have any questions, feel free to drop a comment. We're going to see right now, before I end the video here, you're going to see the sell side start to collapse. There it is. These are all stops getting hit on the way down as quickly as they got filled. These are stops that are getting trickled or attacked from the buy side, and this is exactly what ends up happening when you have a clean trap buyers short trade. You'll start to see that the offer column has a bunch of sell orders coming through. Those are primarily going to be stops, and you can see them hitting all the way through and through immediately right after entering that short trade. I almost endured no drawdown on that initial trade, and we're already 3 points in my favor and working towards that.